and welcome to the Al Monitor Brief. It's Tuesday, October 8th. I'm Kristen Tallman. Today's main segment is a conversation with Philip Bahoshy, the CEO of MAGNiTT, a company based in Dubai, which tracks investments in the Middle East. It's led by Al Monitor's chief business correspondent, Jack Dutton. The interview is timely as the company just released a report on Tuesday diving into where exactly all these venture fund flows are going. Jack and Philip will talk about how the Middle East has performed in comparison to other regions. But first, let's get you caught up on the headlines. On Wednesday, Turkey will start to evacuate its nationals from Lebanon, the Turkish Foreign Ministry said on Tuesday, as Israel increases the number of troops in Lebanon. Hezbollah Deputy Chief Qasim said Tuesday the Lebanese militant group supported Lebanon's efforts for a ceasefire with Israel after 2 weeks of heavy Israeli strikes that killed Hezbollah leader Hassan Nasrallah. Meanwhile, Israel ramped up its ground offensive against Hezbollah along the southern section of the Lebanese coast on Tuesday, deploying more troops and urging civilians near the Mediterranean to evacuate. And in Tunisia, Said has been re-elected as president with 90.69% of votes cast, electoral authorities said Monday, although low turnout reflected widespread discontent in the cradle of the Arab Spring pro-democracy uprisings. Now, on to the main segment.
Hi, Philip. Welcome to the Al Monitor Brief.
Hi, thank you very much for having me.
Great. So MAGNiTT have just released their report into funding for the first 9 months of the year for startups. And you focused on different regions. And it would be great to kind of hear more about what the report found in terms of Middle Eastern trends. What type of deals did we see and which countries were most active?
Yeah, sure. So the report was the Q3 emerging venture markets. So we cover the Middle East, Africa, and Southeast Asia, and that allows us to kind of benchmark venture investment across what we coin the emerging venture markets. Effectively, across the whole emerging venture market space, we saw a 45% drop for the first 9 months compared to last year in terms of venture capital investment, close to $5 billion of investment. The hardest hit geographies over the 9 months were Southeast Asia and Africa. And actually, the Middle East specifically, which saw $1.3 billion worth of investment, actually saw a 13% drop in funding and only a 6% drop in the total number of transactions. So in light of the wider regions, the MENA region has been performing better. We have seen international publications talking about the US, European, and international markets. They seem to have plateaued heading into this year, so not as aggressive declines compared to what we're seeing here. And what we note is that the MENA region tends to lag what happens in the US by at least 2 to 3 quarters. So we anticipate heading into the end of year and into next year, things will begin to flatten out. In the region specifically, we saw that Saudi Arabia ranked first in terms of total amount of funding, and the UAE captured 38% of deal flow and came first in terms of the total number of transactions. Most interestingly, UAE, Saudi, and Egypt all saw increases in the total number of transactions year on year, albeit against the backdrop of a drop of funding. And that kind of highlights that the region has seen a focus on early stage investment over late stage investment activity, as investors have flown towards opportunities at early stage where exits tend to be 6 to 7 years in the making, and therefore can weather the storm of the economic environment that we find ourselves in, with potential exits to come in any recovery in the years ahead.
Yeah, and we saw as well from the report that the Middle East far outperformed other markets and regions, including Africa and Southeast Asia, which saw steeper drops in funding year on year. Globally, in the first 9 months of 2024, it fell by 21% and 11% compared to the first 9 months of 2023. What is it about the Middle East market and environment which has kind of shown resilience compared to other parts of the world?
So I think the first thing to put into context when you look at Southeast Asia is that given it's a far more developed startup ecosystem, maybe 7 to 8 years more developed in terms of venture activity, they're coming off a much higher peak. So as a result, the base by which things are declining are more acute. What you've seen across the board, even in the Middle East, is that given the interest rate environment, late stage funding was the hardest hit in terms of investment activity versus early stage investment activity. And therefore, in Southeast Asia, as a point in case, they've seen a decline in that late stage funding, which has impacted the overall funding figure specifically. When you micro into the better performing geographies here in MENA, specifically Saudi Arabia and the UAE, and even Egypt, which saw a mega deal investment of Halan, you know that there is government initiatives with fund of fund support and the ability to benefit from the oil prices that they've seen over the last couple of years to fuel investment in venture capital, albeit they're also coming from a lower base compared to Southeast Asia and the US. So I think it's that coincidence in terms of government support initiatives in the GCC with regards to investor appetite for venture, and that it's a continually emerging and growing market as opposed to others which have already grown and reached peaks back in 2020 and 21 that they're coming down from.
Yeah, and do you think initiatives like the Saudi Arabia Vision 2030 and other initiatives to diversify the economies away from oil is going to likely see an uptick in this sort of funding? And given, I guess, the amount of government support you're seeing, whether that's through pension funds or fund of funds?
Yeah, so definitely the fund of funds schemes, which are driven from a top-down approach in the kingdom, the likes of the Jeddah Fund of Funds, SVC. One of the things that they really focus on is the funnel, that there's investment activity at the early stage through accelerator programs, incubators. They're really developing the funnel of startup activity. And then at each stage, they've seeded locally investment through the fund of fund schemes. Similarly, here in the UAE, you have the Dubai Future District Fund, you have Mubadala Ventures. So there are sovereign entity or LP funded entities that can support investment to a certain extent. But what has definitely been the case this year over last year is that investment, even within those geographies, has shifted towards early stage investment over late stage investment. And so that growth in early stage investment has really buffered the decline that we've seen relative to other geographies.
Yeah, and we saw that Saudi Arabia-led funding in the MENA region raising $509 million, while the UAE, as you said, led in deal counts. In the future, where are we likely to see the most growth in the region? Is it likely to continue to be from these Gulf countries, Saudi Arabia and the UAE? And what trends can you see going forward?
Yeah, I mean, growth is relative. So if we're talking just about dollar terms of venture investment, I anticipate that the standout economies will remain Saudi Arabia and the UAE. We published a report recently looking at VC to GDP, and we characterized, similarly looking at Southeast Asia, that mega markets like Singapore and the UAE, which have high GDP per capita, smaller populations, infrastructure, government support, regulation, and legal frameworks to support setting up of both startups and investors, are likely to continue to attract both local investment and international investment into their economies. And then we identified the growth economies, which we saw as Saudi Arabia, Indonesia, and Turkey, larger populations, which are important for scale, still relatively high GDP per capita, government-focused support on innovation with depth of talent to support back-end infrastructure of technology. And therefore, for us, those are the kind of typical or most likely geographies to see continued growth heading into the next decade of evolution of venture capital in both of those markets. Not to say that you won't see them in other geographies, but those are the standout geographies for those markets.
And what would you say are the main challenges that are ahead for Middle Eastern startup funding? Can you see any kind of obstacles or economic trends which may cause there to be a slowdown? You said there would be a plateau coming forward with the US economy and then rolling over towards the Middle Eastern and Gulf economies?
So I don't think that the regional economy is completely immune to global economic factors. They have weathered the storm better, and there's government support to a certain extent and again, they're coming from a lower base to see the results of a lower decline compared to other geographies. We have already seen the beginning of an interest rate cut, the first taking place with a 50 basis point. That cut alone will not necessarily stimulate the venture capital space. But if the direction, which has been highlighted by Jerome Powell, is to bring interest rates down as inflation has been curtailed and job opportunities remain strong with a soft recovery likely to happen in the US, we anticipate that that will also trickle down into the region in terms of venture capital investment. International participation in the region continues to grow. Interest in the GCC internationally, specifically from Southeast Asia and Europe, has continued to solidify. We saw a 34% increase in the total number of investors in MENA-based companies and an increased participation from international participants. The challenge will be, when do we see late-stage funding return? As I mentioned, when interest rates went up, the most impacted segment was late-stage investment. If interest rate trends continue to decline, will we see later-stage investments coming from the region? And historically, the biggest investors at late stage have tended to come from outside of the region, and the appetite for late-stage investment to grow. A challenge that is worth highlighting is liquidity and ROI. We remain in an environment where exits remain muted. This is the third year of declining M&A activity here in the MENA region. If you take all 10 years of funded companies here in the MENA region, only 7.5% have actually exited. And I think that that is a challenge that needs to somehow be addressed to see liquidity come back and risk appetite to continue to grow and justify investment in venture capital over at least the next 2 to 3 years before we see a healthy economy return where naturally investment will come back into the venture space.
Great. Well, thanks very much for that. That was a really insightful conversation, and look forward to catching up with you again with the next report.
Sounds good. Thank you very much, Jack. Appreciate it.
Thank you.
That's it for today, Tuesday, October 8th. You can read all these stories and more impacting the region at allmonitor.com.